Good morning, everyone. We are back again here on YouTube with another live execution on Nasdaq futures. And here is Study TradePie on YouTube channel. So, without any hesitation, I had a very quick scalp in pre-market session before the opening bell, and I will create a video to recap and review the position I made in the pre-market session. So now let's jump into the market and see what we have from the 15-minute chart. As you can see, I'm interested to see this sell side liquidity over here, that is relative equal lows resting below the marketplace over here. And you can see the market after opening this morning, I'm sorry, the market after opening at 6 p.m. started going lower with a move, and after that started going higher once again above the new day opening gap, but failed to reach to this relative equal highs resting that is created in the last hour of the market yesterday's trading. After that, we started selling off during the Asians and London session with a very nice run towards the daily BC that is formed in last week, and we had a very nice reaction after tapping into the daily inefficiency towards the consequent encouragement of the new week opening gap for current week. Now, I'm interested in this inefficiency in the 15-minute chart. As you can see, this is a BC that I'm highlighting over here, and I would like to see how the market is reacting to this inefficiency. So far, the bodies of the candle remain inside the 15-minute inefficiency, and let's see how will open and do what we will do in the opening range. We have a quiet, not big, not small opening range gap. The settlement price for yesterday was at 21,400, and you can see now we are around 130 handles below the settlement price of yesterday. So it is probable that the market tries reaching higher over here. After that, a 5-minute chart, and we will see the business on the 5-minute chart. As you can see over here, after tapping into the daily inefficiency, we had a very nice run going higher towards the consequent encouragement. Also, we cleared these relative equal highs over here. We have very smooth area resting in the marketplace over here that creates the buy side liquidity from Asian session, end of the Asian session. And yeah, I think this buy side liquidity is also coupled with the settlement price of yesterday's trading session. And now we can get back to our 1-minute chart to see the opening bell and how the market is reacting actually. So remember that we have this buy side liquidity and this opening range gap high. Now we opened in the market, and we are over here. We opened in discount. It is preferable to see a run initially higher toward the consequent encouragement of the new week opening gap. All right, now we are now trading inside the 15-minute inefficiency, this one over here. We had a very good reaction from the consequent encouragement of the first presented fair value gap that was formed on Monday this week. So now we are trading at the top of the 15-minute BC. All right. To me, the bias today is mainly bullish towards the buy side liquidity over here for the first 30 minutes. Also note that relative equal highs on the 5-minute chart. We tapped into the low of the new week opening gap for current week, and now still the market is strongly going higher. I'm waiting for the first presented fair value gap to be created, and after that, based on that, I will try to get into any position. Just a quick measurement from this to this settlement price. Okay, we have the midpoint of the opening range at 21,340 almost. Let's see. We tapped into the first presented fair value gaps on last week's Tuesday and Wednesday. And here we go. We are almost 50% of the opening range gap. Most likely this is going to be our first presented fair value gap formed over here, and I'm highlighting this. We have a 20 handle gap formed over here. I'm placing a buy position and aiming for the buy side liquidity on the 5-minute chart. We got filled on this position, and just let's wait to see the reaction on of the market. It was pretty quick for this session, the creation of first presented fair value gap. This shows a little strength in the market that is going to be bullish. And yeah, now we are in the position. So far so good. We tapped into the midpoint of the opening range gap and started going higher. Trading inside the inefficiencies from last Tuesday and Wednesday. Getting back into the first presented fair value gap over here, and trading into the consequent encouragement of the first presented fair value gap over here, and let's see how the market is reacting towards this. Good morning, Martina. How are you doing? You are my always only fan on these live streams. I'm pretty sure I'm pretty lucky to have you as a support. Thank you so much for being with me and supporting me in these live streams. So now let's get back to the business over here on the chart. We have traded above the swing high in the 5 minute over here, but we failed to close above this 5 minute inefficiency, and I'm interested to see how the market is acting around this 50% level of the open range gap. To me, still the bias is bullish, so let's wait and give the market enough time to do its job. Note that all the bodies and candles over here are respecting the upper portion of this first presented fair value gap, and only 1 week traded through the consequent encouragement. Once again, we tapped into the consequent encouragement, and the market is gyrating a little in consolidation phase now. Now we started going towards the midpoint of the opening range gap at 21,400 almost. I'm sorry, 340. We traded into the midpoint of the opening range gap again. I'm trailing down my target over here to keep it just above the consequent encouragement, as the strategy is always saying. In this case, we have our risk to reward ratio. Now I would like to see the quadrant levels also here. We started trading and closing above the consequent encouragement of the open range gap, and yeah, so far everything is in favor. Just a little bit distortion in the time over here. I'm not very interested to see market is trading below this consequent encouragement, but because of the timing, it's possible that the market once again tries to explore this upper portion of this inefficiency. We traded inside the first present fair value gap of last Wednesday in the morning session and the consequent encouragement of the current new week opening gap, just one tick below that. Market is gyrating around the midpoint of the consequent encouragement of the new week opening gap, and we had a nice one above the consequent encouragement. At this point, I bring my stop loss over here below the midpoint of this first presented fair value gap in order to cover the costs and fees. Now we are heading towards the upper quadrant of the open range gap. And there we go. We got our profit target within, I guess, 1, 2, 3, 4, 5, 6, 7, 8. Within 10 minutes, around $900 per contract, and the upper quadrant was traded successfully. As I was explaining you, we had a kind of distortion in time over here that is completely normal and expectable because we reached to the midpoint of the opening range gap over here, and the smart money was trying to accumulate over here after this big run over here and clearing the buy side liquidity resting above this swing high. So the smart money was accumulating and collecting the positions for going long over here. And in my opinion, they're targeting this 21,399 buy side liquidity because we have the relative equal highs in the 15-minute chart. If you notice, it's resting over here. We have this very smooth relative equal highs, and that is the target of the market in my opinion for this morning session. But we have to be patient, and because the market is not trading one-sided always. It is possible, and I saw a lot of times market was traded one-sided upward or downward, but this is not very common in the marketplace, and it has to deliver efficient prices. So now I remove this Fibonacci tool for creating the opening range gap over here, and I don't think we need this opening range gap over here. Just for my notes, I need to write it down. Okay. Okay. Now we can cancel this. The buy side liquidity of my interest is over here. Now we can also put this line here as the buy side liquidity. And we can cancel this horizontal line. This is the buy side liquidity from the price. Also I can write 21,399 even, and we have this from the Asian session over here. If you can see, end of the Asian session going to the midnight, we have relative equal highs resting around the new week opening gaps high, as well as the new day opening gaps from Friday and Thursday in the last week. So this is a very important area for the market and price to trying to reach, because of confluence of these important levels, new week opening gaps and new day opening gaps. And yeah, this was the business for today in my opinion, and I'm pretty happy to get my position and my orders delivered perfectly. The one pre-market over here, you can see after my exit the market started going lower very nicely. This was a very clean exit over here, and I'm so happy for this. After that we had this beautiful run from the opening bell upside, and we started to reach towards the upper quadrant of the opening range gap, and now we are just below the new day opening gaps low from last Thursday. We just tapped into that, and yeah, there we go. This is a very nice and clean market, as I was totally expected the move upside. It's true, in the beginning of the video I showed you this swing low over here for sell side liquidity, but this can be reached in the longer term. Even if you look over here, we have a very beautiful smooth area of buy side liquidities from yesterday's trading in London session, in New York session. Around after lunchtime we started to reach to this buy side liquidity over here, but we failed and started going lower. In the yesterday's trading, the market was very much cleaner in the PM session instead of morning session, and this is typical of days without any news, and because this week we don't have any sort of high impact news until Thursday, so the market can be sometimes choppy like that. And yesterday I fell into this trap. This is completely normal and acceptable. I'm here to learn, I'm here to improve myself and make myself strong against my weaknesses, so there's nothing to complain. That is my decision to choose trading as a job in order to get successful and get enough money in this very bad condition in the market for being able to overcome the expenses of life. All right. So far we are in a good hands, and now we are trying to reach to the buy side liquidity that I highlighted, resting just below the new week opening gaps low high, and yes. Well, I also had another position just to practice on crude oil. I closed it in profit, as you can see on the market, and over here we have delivered the buy side liquidity from Asian sessions at 21,399, as well as the high of the opening range gap over here above the new week opening gaps high. You can see the market started reacting to go lower, but it's still bullish in my opinion, the market, because we do have this buy side liquidity resting above all of these highs from yesterday's trading, but I'm expecting a sort of retracement at this time because we delivered to the buy side liquidity and the opening range gaps high. Well, as you can see, the market is sharply going lower over here. This is completely expectable. Now my eyes are in the midpoint of this week over here. I'm interested to see how it's going to be traded. So far the body of this candle respected the midpoint. Now we have this small portion of imbalance in the market over here. This is coupled with this inefficiency over here, and we can do like this because it's a inefficiency, it's not a volume gap. And you can see the market traded into the lower half of the inefficiency and now started going lower with this candle. Now once again to the consequent encouragement of this inefficiency and trading into the volume imbalance. All right, now once again we are trying to reach the buy side liquidity. Remember that once we clear any premium or discount liquidity, it doesn't mean that the market finishes its job and now they have to turn. Each level can be touched several times, as well as there is liquidity and as well as there is order resting around that area. Because Well, we have this buy side liquidity over here. What is above the buy side liquidity? There are always buy stops resting above this area. But the thing is, we don't know how far we have position, we have orders resting above this buy side liquidity. So that's why we can week through the liquidity pool and then come back again, have a very sharper move to pass through this liquidity pool and preferably reaching towards these important levels from last week. We can see we have the first presented fair value gaps of yesterday and last Friday, as well as the new day opening gap of today. So this is a quite important level resting in the market at this price over here. Now I like to see if the market is able to, we have this inefficiency. If the market can keep itself above this inefficiency to reach towards the new day opening gap. We closed just below the buy side imbalance, sell side inefficiency. Now I'm making the chart a little smaller and just to show you the businesses for today, we have these prices. Entry at 21,324 and a half, and after 10 minutes we have the exit at 21,371, and that's the business for today's morning session. Also, I had pretty good entry in the pre-market before the opening bell, and I will provide some video for this entry over here, these two entries, as well as the trade review for this very nice run in from the first presented fair value gap of today's AM session. Once again tapped into the inefficiency over here. Now it's acting as an inversion, and I would like to see the market is reaching lower prices toward this inefficiency over here below the consequent encouragement of the new week opening gap. Well, we had a very nice reaction towards this inefficiency inversion fair value gap. From here to this place is 2200, And if we keep going from here to the consequent encouragement, gives us 30 and to this midpoint is 35 almost. Once again traded into the new day opening gaps low from last Thursday. All right, we had a very wild run in the marketplace that traded through the new day opening gaps for today and last week. It's a very giant week, trying to reach towards the buy side liquidity at 21,487. Note that the bodies of the candles are still remaining inside this inversion fair value gap that I highlighted. Now that we closed above this inefficiency, we can consider another pullback towards inefficiency and use it as a reclaimed fair value gap, trying to reach higher prices. The first objective would be the low of the new day opening gap low for today's trading session. All right. Note over here, this string low with these lows over here are creating relative equal lows, and I would like to see how the market is acting, because in my opinion the market can have a retracement lower than this low towards the consequent encouragement of the new week opening gap, and use this as a springboard for jumping higher prices. Now we're trying to trade through the new day opening gaps high as well as new week opening gaps high, and this is an area for price that is always having some difficulty to pass through, so that's why we have all the business over here resting, below these levels, because these are very strong levels in the price action that gravitate and attract the price towards themselves, so they want to keep the price around it. Now we tapped into the new day opening gap for Wednesday today, and as you can see, the market again came back into the range over here. Now it's pretty much very dirty price action. The beautiful run was from 9:30 to 10 o'clock, and I just measured this wick created over here. You can see the consequent encouragement of the wick is right below the new day opening gaps low, as well as the first presented fair value gap on yesterday's trading session, AM session. So these are all the levels that make the price very difficult to go through and has a very beautiful run. If you notice over here also, we have this distortion of time and consolidation around the consequent encouragement of the opening range gap. After that, you see the market started running higher very nicely. So these things are normal because of all the important levels resting around this area in the marketplace. You have the difficulty. Now that we closed above the new week opening gaps high, I'm expecting to see a very good big white candle going upside and getting closer to this buy side liquidity at 41,487. Now still the market is gyrating between these two levels. I would like to check for another PD array that is a kind of gray PD array on this level to this level. Okay, you can see 407. How about this week? 408. And 413. Once again, trying to reach to this fair value gap. This is not very favorable actually, because this is problematic in the price action. After closing above the new week opening gaps high, I was expecting to use this level as a springboard for reaching higher prices, not getting back into the range and closing below the new week opening gaps high. Well, you can see the market is respecting this 1 minute fair value gap as it closed above it. Even though the wicks are passing through the fair value gap, they are permissible to do this, but the bodies are staying above this fair value gap. And also you note this volume imbalance over here and study how it's acting in the marketplace. Once again traded inside that fair value gap, and yes, as I was expected, this is not going to be an inversion, so I'm expecting to see a run higher over here, big white candles, because in my opinion we traded inside this breaker block over here as well as this inefficiency, so all of these are enough reason for sending price higher. Still the bodies of the candle are respecting that fair value gap, and this fair value gap is valid. Okay, this is more beautiful. For this candle, I am expecting to close above the new week opening gaps high, and the very next candle goes toward this relative equal highs over here. Note the closure of these candles over here. It's at the consequent encouragement of this inefficiency. Now, in this candle or the very next candle, I'm expecting the big candle form upward. Okay, this candle should start moving upward. Very nice, as I was expected. I'm saying this candle because of the time. This is exactly at 10:20, and 10:20 is the time for a kind of market movement towards the liquidity resting above these swing highs, their relative equal highs, as well as the new day opening gap and the inefficiencies from as a form of first presented fair value gap. Okay, now the move has started. Let's see if we can get above these relative equal highs over here. Well, this type of behavior in the market is not very favorable, because in this candle or the previous one we should have cleared the buy side liquidity resting above these two relative equal highs, but not that we have this small portion of the price that is a gap of form BC. Once again traded inside the BC, forming at 1020 over here, as well as the new week's opening gap high. Now I'm expecting another big white candles forming at in this candle or the very next candle at 1025, and they should clear these relative equal highs over here. I got back inside the breaker. Okay, now we have this kind of market structure that is very high resistant after this very beautiful run from this 15-minute BC. You can see over here we had this very nice run in the first 30 minutes until 10 o'clock, and at 10 after that we started consolidation. The market is not moving any side, and this is a dirty price action so far. For those who want to do something else, I suggest you go do something else, because this is not the market you want to stay in, and I'm over here only to study, practice, and increase my patience. Okay, we see that 1025 candle was a big red down close candle, as I was not expecting. I was expecting to see a run higher toward this relative equal highs as well as this high over here, but apparently the market is playing around and doesn't want to move. We have to wait. Probably they're starting the move toward this buy side liquidity over here at the macro time for 11. Okay, the candle at 26 started going higher. Nice. Note that we clearly created this relative equal lows over here, and I'm expecting the market now goes above these highs and probably once again goes below. After that we start running higher. I don't know, maybe this type of expectation is not very rational to a lot of people, but I'm expecting something like this. Yeah, going above this relative equal highs, then going back and clearing the sell side liquidity resting over here. After that, starting running higher. And the reason to do this is by a run going above these relative equal highs, they will encourage people and the retail traders to start going higher for running higher. But this is a fake move, and they're just going higher to trigger the stop the buy stops over here for those who are in short and kick them out. After that, those who started going long, they will put their stop loss below these equal lows resting over here in the market, and they will come back to these equal lows and collect all the orders that are type of sell stops from here, and then they start moving higher towards this buy side liquidity from yesterday's trade. Well, we failed to go above this equal highs over here, but we are getting close to this equal lows. So let's see. You see that at this time, whatever the market is giving, it's taken back with a lot of big shadows, big candles. So this is not a low resistance liquidity run, and it's just sort of time distortion, this area over here, creating the equal highs and lows around the marketplace is type of engineering for liquidity, and you have to be patient and wait for one of them to be paired, and then they come back to attack the other liquidity. Well, the candle of 1030 was a big white candle, very nice. Once again, we tap into the new week opening gap. You can see the amount of candles touching this new week opening gaps high, as well as the new day's opening gaps high, are pretty much, and the market is basically gyrating between these two levels: the low of the new day opening gap and the high of the new week opening gap. We came inside this inefficiency over here. Now we are trading in the lower half of this inefficiency. Okay, the sell side liquidity resting equal lows already purged. Now that we purged this sell side liquidity, I'm expecting the market starting going higher towards this buy side liquidity above these relative equal highs. You can see after purging this liquidity over here, we started going higher, and now the goal is this buy side liquidity. gyrating around the consequent encouragement of the fair value gap in 1 minute chart. And if you look at the 15-minute, 5-minute chart, there's nothing except this consolidation. And the 15-minute chart, nothing either. We have this big inefficiency in the 15-minute chart. Once again traded below the sell side liquidity. Well, if you remember, I was expecting that the market is spending time around here till the macro time for 11 o'clock. And now we are getting closer to 11 o'clock, so they cleared the sell side liquidity over here, and now they're starting to go towards the buy side liquidity above this. Okay, now we tapped into this buy side liquidity also, you can see, in the candle of 1040. Now I'm expecting to have a little run lower to this inefficiency. This is not a useful inefficiency. To have a run to this inefficiency, and from here starts going higher. Okay, we got into the inefficiency over here, and now I'm expecting to see they send the price higher towards the buy side liquidity at 21,487. Note that we didn't close below the consequent encroachment of this inefficiency. Okay, now we are, in my opinion, this is a order block resting over here, and I would like to measure this in order to see how the market is respecting the 50% or midpoint of the order block. They're spending time around the mean threshold of the order block at 21,382 and a quarter. Well, we just closed below the upper quadrant of the order block. If you notice, and if I make this as a to see the OTE, you can see the market is spending time between these levels. These are the OTE levels, and if you consider this dealing range over here, the market spends time around the OTE, and we can expect the run higher towards the first projection of the range to this first presented fair value gap of last Friday. Well, now we tap into the low of the new day opening gap. Maybe we can use this as an inversion fair value gap over here because we closed below that and we respected always the lower quadrant of the lower half of the fair value gap. And we do have these levels over here at 62 that I was mentioning before in the beginning of the live stream. Once again, we tap into the buy side liquidity and let's see if we can start going higher here in the macro time. Now we closed again above the BC form over here, so maybe they can use this as another reclaimed fair value gap. and notice how the market was area over here and the bodies were staying in the upper portion of this rectangle. Well, note how the market was reacting again after touching the new day open gaps over here. This is a perfect delivery in the market. After creating all of this range over here, first they decided to take out the sell side liquidity. After that, once again, they tried to take out the sell side liquidity, and immediately within 3 minutes, they started going higher to the buy side liquidity. And now you see this big white candle going above the peak shadow at 10:01, and we clear orders resting above this candle over here. So now you can see the market is trying to reach higher towards this buy side liquidity from yesterday's trading trading day. Yeah, and this is the beauty. I was saying that first they decided to create all of this range over here with relative equal highs and lows. Then first they took out the sell side liquidity and then jumped higher towards the buy side liquidity and took the position above that buy side. And once again, they came down over here to this optimal trade entry area that is measured from this high, this low to this high, and they spend time over here. You can see in the upper portion of the optimal trade entry with their candles body, and after that at 10:49 they started running. It's just 1 minute before the macro time window between 10:50 and 11:10 the big move started. So after this one they created also this inefficiency, this buy side imbalance, sell side inefficiency, and they traded inside that twice. After that we started running in higher prices, and now you can see the market is still trying reaching higher, and this is perfect delivery in the market. If you are patient enough to see where the you can see the first projection of this range over here, that is the first presented fair value gap, also has been delivered. If I want to show you exactly what I'm saying, is this one. You can see the first projection of this dealing range is delivered over here. The high of this candle is formed at 21,463 even, and the first projection is 21,462, just one point above that, and after that the market started going lower. Okay, you can see that the market has delivered to this level over here. And yeah, I think this is perfect delivery in the market, as you can see. Just let me bring this a little bit this side. If I put the projection level of 1.5 also, you can see, where can I put that? 1.5 level is just below the sell side liquidity that I highlighted. Well, you can see optimal trade entry works pretty much well over here, and yeah, this is a perfect delivering price action. I cannot complain about anything here. And now there we go, we are going towards the buy side liquidity as well as the 1.5 projection level from this dealing range. All of this is happening in the macro time between 10:50 and 11:10. We have this small inefficiency over here, and I'm watching the market to come over here and start going higher towards this buy side that I highlighted. It's from yesterday's trading day. Okay, now we traded inside this inefficiency and I'm expecting the run higher. Note that you have to consider also the volume imbalances over here. We have one volume imbalance over here and another one here. Very beautiful reaction from the consequent encouragement of this inefficiency. And there you go. The buy side liquidity is delivered and everything was outlined today in the live stream. As you can watch, it's perfect delivery and to me it's done. For me everything today is finished and I'm so happy for today's session. The delivery of the price was very nice. The patient over here was required for this beautiful run toward this buy side liquidity pool. And now let's see if we can reach to the new day open gap from this Tuesday, yesterday. Just fell short, I think one or two tick below the new day opening gaps low. And there you go. We delivered also the new day opening gap of yesterday. So yeah, to me, market today was pretty nice. It had a very good opportunity in pre-market. After that, at 9:30, from the first presented fair value gap, we have a very nice delivery towards the consequent encouragement of the new week opening gap over here, as well as the upper quadrant of the new open range gap. Then we spent a little time to reach to buy side liquidity that I highlighted from 15-minute chart over here. And then we spent quite long time in the market creating this range, and finally with the optimal trade entry we started going higher to reach the new day open gaps from yesterday. And this is the whole business for today. I will provide a video talking about the trades over here and the paper and the review of the trade I had in the pre-market, as well as the first presented fair value gap over here later this evening. And yeah, that's enough for today. It's 11:10, and I hope you guys enjoyed this video, this live stream. Everything was called as it was live price action over here, and the delivery of the market was perfect. So till talk to you another time. I'm not sure tomorrow if I'm able to have a live stream, but I will try my best to come over online and talk to you more about the price action. So we'll talk to you another time in another live stream.